Hey everybody, this is Andrew. I want to share some of my thoughts this morning, and pretty much the ideas are how to survive in the stock market. I think too many people have forgotten what happened in the NASDAQ. It's a new generation of investors, traders, that the NASDAQ, again in the early 2000s, really went from 5,000 and change to 1,000 and change. Bear markets can be absolutely brutal. So really the key of surviving, or let's say our performance, is surviving on the downside. There will be bear markets, and bear markets on average last about 9 months or longer. And you really never know how long a bear market will last. The fact is, we had this V bottom, which was, yes, it was brutal, but it was very short-lived. But when you look at bear markets, on average, they could be 9 months, they could be 2-3 years, or in the case of Japan, from 1989, it still hasn't taken out that number, 39,000. So it's a heck of a long time. So really what I want to try to talk about is, if you really want to be a long-term investor, like me, we've been doing this since 1994, is you need to have a plan. It isn't like, you're not gambling, you're not buying a lottery ticket. The idea that we do, and I'd like to share with you, is we buy on fundamentals and technicals, and we sell on technicals. And really, selling on the technical isn't all that complicated. We're using moving averages. That's really the crux of this conversation, is how to use moving averages to stay in your sweet spot, which means making money when the moving averages are applicable. And then also protecting on the downside, because you really never know how bad it can get. And it all depends on you as the trader / investor. We're both. I'm a trader and an investor. I want to hold stocks as a trend follower long term. But when they start breaking down, I don't know how bad they can get. So bottom line is like this. My rules, and just throwing it out there to share with you, is we're buying on the fundamentals. We're looking to buy the strongest stocks in the strongest sectors when the market is healthy. And the technicals are, we're looking for breakouts pretty much, with patterns and pretty much with moving averages. But the breakdowns, when we're selling on the technicals, for me mostly, is stop losses, like 7%. That's it. I keep my losses small. I live another day, and that's what this is about, surviving. And then if I'm in something that I have conviction and I surpass a 50-period exponential moving average, I'm out on volume. I'm out. Nothing to think about. And then my sweet spot for trading, let's say my growth stocks, is when there's no magic number. It could be 20 or 21 exponential moving average, and it's above the 50. That's when things are looking positive and the stock's going up. If you're a midterm trader, maybe you just use a 50-period exponential moving average. But the line in the sand, the absolute line in the sand between light and darkness, bull and bear, is a 200-day moving average, or I like using a 200-day exponential moving average. If you're below a 200-day moving average, either one of them, you're in a bear market, and you don't want to be long. You don't know how bad it can get and how long it can be. So, you can always buy again. You can always scale in. Basically it's an insurance policy using these moving averages. So what I try to do is I try to sidestep bear markets. I'm going to get chopped around. It's obvious. Like today, the market's up, even though I got whacked on a lot of my positions last week, but it's all part of the game. You just got to be able to take the psychology of it as well. And sidestepping the bear markets will lead to outperformance in the long term. And it's really, you scale in and scale out. My longer term idea that we want to hold stocks for very long periods of time, because that's how you create wealth, is we scale in with 50-period moving averages, 100-period moving averages, and 200-period moving averages. Like, the world is beautiful when the 50 is above the 100 and the 200. I want to be 100% long. When the 10 is below, or the 10-week, I'll actually look at the weekly. The 10-week is below the 20-week. I go to 50% allocation in that share. And it's also based on fundamentals again. Everything is a combination of fundamentals and technicals. And if they're both below the 200, see ya. I'm out. And the beauty of this, it's once a week. And you can go through, and you don't have to have a million stocks, because you don't really get anywhere. I mean, I have a focused group of companies that I want to be as if I'm an owner of, or my wife is, basically. And this is what the whole idea is: buying on fundamentals and technicals and selling on technicals, surviving bear markets, and surviving being in the stock market for a long time. Hopefully this was educational. I would like you to subscribe to me, and hopefully I can help you. I mean, it's all educational, and thank you very much.